Okay. Hey guys, what a world we're in. So now we're at what 3 days going into this Russian invasion, and it's funny because as soon as you think the economy is picking up steam, um, like when you get your car fixed and it's fresh out, as soon as you like, I'm starting up the engine, it cuts right out. That's what it seems like with this whole economy, and heart goes out to and prayers or with Ukraine country and the invasion, the conflict that is going on between those folks. But nevertheless, the impact that it's having in our economy right now has really left you feeling after really starting to make some headwinds out of the pandemic. What left is there for it to happen? It was ultimately going to be a war, right? So what I want to talk to you about today is, hey, where the stock market is right now, what can you do or what should you be doing? And I mean, is this really the best time to sell? Well, the fact is, and the short answer before we get all the way to the end of the video is no, don't sell. Unless you have a dire emergency, we're in for the long haul. And the fact is, we're in the little ticker marks of the stock market that we know if you buy and hold long term, it will eventually return you dividends because the stock market continues to rise. But the fact is, what we're going through now is the turbulence, the things that to where the stock market really responds. You have rates higher his higher history of inflation since 1947, 7.5%. You have a crushed economy of supply and demand. Every sector is filled. You got people who are not getting their furniture for a year. You got people who are bidding 100,000 over asking price for a home. Hundreds of people are filing to see one house because the demand is so high. Used car rates are now more are higher than new car rates. A bag of chips at the grocery store, normal grocery store visit is now running you $250 more. And if that wasn't enough activity on top of um, having the lowest unemployment rate as it is, and people are still leaving their jobs in droves while more jobs are being added to the economy. And then also, as you're moving about in your car, now gas with the oil, um, well, I'm sorry, when the war broke out, now gas has at the pump is on average $4.51 around the country. And so you look at this war that happened that we were kind of subsiding, you wonder what do I do? Because as we see it, and you see the stock market reacting, where stock values and the prices were decreasing, and the idea was that prior to the values of the stock market, a lot of these companies were over number one either overinflated or they were already pricing in the impending uh, Fed rate hike. So what do? You still hold on. And it's hard because why would you want to hold on to an investment that literally day by day you're losing money? Because the fact is, you always have to understand there are some short term investments. So if you're trading stocks, this probably isn't the best time for you to buy and sell quickly. But if you're holding stocks, if you don't feel right and it's not comfortable, and you're not understanding what's going on, there's no force to buy more. But if you really understand your long-term plan, you understand that while the stock market is down and kind of going into a bear market to where prices are considering down, and I mean it's dropping once you get past 20%, then you say, hey, I might want to buy more. But it's tough to buy more when you're really starting to wonder, like, well, we had the pandemic and we see the CDC starting to ease mask mandates. But right when we're starting to see the ease and make some progress back to what is considered normal, war breaks out. And I want to tell you that the reality of what's going on is what you got to take yourself out of to put in your investor mindset. Your investor mindset, when you invest in the stock market, you're buying these companies. And what are things you're looking for? If you need more data, look at, okay, go to the company, see how much cash they have on hand versus debt. See, look at what they're doing for future growth. If you want more information, go get more information. But before you think about selling, understand that when you sell, you're locking in that loss. But when you understand that, just like stock market dropped nearly 40% in 2020 when the pandemic began, it returned nearly 3-4 months later and went on to have one record-breaking year, but it's still going up. And if you can understand all that information, if you can understand everything that's going around, and understand that over the long haul, 3 years, 5 years plus, stock market always returns positive. And even in the pandemic, it didn't take that long. The average return for a stock market of its gains is about 18 months. So, like I said, if you're not comfortable buying more, don't buy more. But I'm steadily investing. If you have a lump sum of money and you're just not comfortable, dollar cost average those dollars into the market. Give a little bit at a time, a little bit at a time. Because as you're buying, if you're dollar cost averaging, you're getting lower prices at some point overall throughout this process, whether the market's up or down, but it's still going to be lower than what it's going to be in about 4 to 5 years or 10 years or 20 years. So I would encourage you during this time, really take and look at how the stock market responds, because we know the stock market typically has a forward-thinking view. And with all this information, sometimes it can get molded, but you do have to understand that we're still producing goods and services. We're still operating. Look at the way our economy is moving, the factors that indicate our economy. And granted, there are conditions that would make someone question, but we know we will survive. And if you don't know, if you don't have the confidence, understand that there's been World War One, there's been World War II, there's been other wars, and in each case, the stock market has grown for that. So I would encourage you as an investor, stay firm to your thing. Do what you want. And in this video, I wanted you, if anything, to give some encouragement that, hey, you will do better. Hold in for the long term. If you're not comfortable, don't buy anymore until you feel a little bit more comfortable. But if you had the opportunity, I would continue to buy. Continue to buy. And this is the part where investors and people start to subside. But this is the part in most investment books where they say, can you stomach it? And the thing is, you can stomach it at $1,000. Can you stomach it at 10,000? Can you stomach it at 100,000? Can you stomach it at 1,000,000? And the thing is, the situation doesn't change. The only thing that makes it change is the amount of money that's involved. But the real situation, the real impact, if you lost 10% at $1,000 or lost 10% at $100,000, you still lost 10%. And that's what you have to understand. Don't allow the weight of the money deter you from your plan, because if it was okay at 1,000, it will still be okay with a few more zeros behind it. Hope you guys enjoyed this video. If you like it, give it a thumbs up. Share this video with a friend. And if you're stopping by, please consider subscribing to the channel where we talk everything personal finance, so I can help you improve your money, invest your money, increase your income, increase your credit score, and begin investing. Can't wait to see you guys in the next video.